Hi there. Very good morning and good afternoon to all of you, depending on wherever you are staying. So, as promised, I'm live in this live session uh, to discuss a lot of points, and most important of all, that I could not do on Wednesday, Thursday morning, was about Tanla Solutions. So I want to discuss about Tanla Solutions. I want to discuss about it in detail. Now, apart from that, I'll also discuss about IPOs. So not that happiness IPO that everybody is asking me, but about IPO in general. Why I do not invest, what are the reasons, and you can take your own call in that. So these are the 2 points I'll discuss, and then I'll answer your queries, whatever queries that you'll be having. First of all, thanks a lot for all of you for all the support through YouTube, all the support through my creator page on Patreon, the members that I have had. It has been a magnificent journey, and I hope to bring in more stuff to you going forward. Uh, all I can say is that I try my best to bring to you the best of stocks and whatever knowledge that I currently have. A second thing is that those who are on Patreon, uh, they might not be getting a number of podcasts because I'm looking at some renovation that is being done at home, so it is taking some time. But hopefully, from 15th post 15th of September, things will normalize. Yes, I will put a podcast. There's no question about it, but it would not be very regular, but once every 3 4 days you'll get one. Plus there'll be updates, and I answer your queries pretty regularly, and you would be aware of that. So that is how it is. That is how the things have been shaping up, and that is how uh, just a second. So that is how everything is set up. So facing that issue. So let more people join in. Let others join in, and I'll definitely be looking to talk about both Tanla and Kilpest. Sorry, Tanla and the IPO. Hi Jayashankar. Hi Samitra. So one thing I want to say about the markets in US here and in India, people are wary that the markets are going up sharply, so whether to book profits or not. I believe market will continue to rise. There will be chances where there will be fall of 100 200 points, sudden falls that you would encounter. But after that, the markets will continue to rise because some of the companies listed in US as well as here in India are going to perform very well. And these companies are large cap, mega cap companies that have been doing well. So kindly be invested. Yes, you can shift, sell, and buy more of other products and other things. Uh, that's how it can be. You can shift bases from one sector to another, but always be invested at least 80%, 80 85% be in the market. And yes, 10 15% you can have cash, that okay, if things really go wrong, then you'll have cash at the side to invest in. It is not a place where you can just book out and wait for decline, that okay, a decline will come, and time the market and then buy into the market. So uh, take that into consideration. Uh, now, now I'm going to talk about Tanla Solutions. Magnificent results. There's no doubt about it that Tanla has went ahead and gave an EPS of 5 rupees. That is just absolutely magnificent, considering what the results came out for the uh, you can say the March quarter. And it seems like that at FY21 they're going to end up with an EPS somewhere around between 20 to 22 rupees. Considering that at 200 rupees, the stock seems very undervalued. And I would not be surprised if the stock goes beyond 350 and closer to 400, probably in a year and a half times. But that That does not mean that you go ahead and buy tomorrow and then sit for a 70% upside in a year, and that is just magnificent, that is just great, and you will get the returns. There are a lot of issues which I find, and which I feel there is, and that's why I recommended it at 40 rupees, at 50 rupees, and although these are all my own calls and take your own call in this, so the disclaimer applies, but I did say at 50 60 rupees that it will be 200, and I have that video with me. I'll put a link also here, in which I said that this could go to 200, 220. It has reached 200, 220, but I am just flabbergasted with the kind of, you can say, accounting and numbers that Tanla is putting in. I'm not see I cannot confirm that whether this is true or wrong, so I cannot say explicitly. But what I can say here is that they had a depreciation of around 80 odd crores, sorry, a loss of around 80 odd crores, with a depreciation figure of over 100 crores for the March quarter. And in the June quarter, they came out with numbers in which there was no depreciation whatsoever. Although in the last 5 to 10 years, they have shown some sort of depreciations, whether 14, 15, 18 crores, 20 crores. There was absolutely no depreciation. Now, in the update just prior to, or just at the point of the annual results in March, which came out in May, they told that they are having trouble getting money from their vendors like Vodafone, etc. They said that there will be a lot of, you can say, problems with the numbers because of the COVID situation. They also said that they were not able to sell products in the same manner as they were doing before. So it felt to investors that the buyback at 80 rupees is a very good deal at 60, 65, and people wanted to get out in the buyback at 80 rupees. uh, the company came out with buyback at 80 rupees, and I was extremely positive that for sure the stock will go past 80, probably 100, and I was invested in the stock from around uh, way less than that, and exited around 100, considering the fact that the company's numbers, I believe, is not sustainable. I still believe that there is a scope of 60 to 70 crores of depreciation that they could have shown. Although I'm not an expert in this, so you can do your analysis and all. Maybe the depreciation, because they have mentioned, the company has mentioned that whenever it is feasible, I'm sorry, whenever it is feasible and whenever it is required, they will show it, that when there is a transfer of the, you can say, uh, they have said something on the lines of that, that there will be a you can say, transfer of the mechanics of the products that they are doing, or all the services that they are providing, so for which the products that they are using, the transfer or change in that would end up having depreciation of that product getting depreciated on the books of accounts. So it may happen that it could come up next month, sorry, next quarter. It may happen, it may not come up in the next 2 3 quarters. So really I am not comfortable with the numbers that they are producing, not because that the numbers are not right. I'm not saying that in any way. The numbers could be absolutely perfect, and the company knows best about it, with a good CA and everything in there. And I must say the management and the board, the people in the board are top class in this company, so don't doubt the company in that regard. I'm just saying that the numbers are hard to understand, and that's why I would not invest at these prices. uh, what I would like to see is similar numbers coming up 3 4 5 quarters, and then updates from the management or the company in the annual report. And then probably I will look at the company in more detail and in different sense, because then I would say that okay, there is no depreciation, okay, there is no other things that are coming in and making me confused with the numbers, and the numbers are straightforward sales and these are the expenses, and then the net profit comes out to be like this, like the way they have produced the numbers in June. If that is the case, then probably I will definitely buy the stock even at 3, 4, 500, depending on what is the profit growth that the company is showing. So this is my only point. But if you consider that this quarter's numbers will continue to feature in next quarter and the subsequent quarters, then I would not be surprised to see the stock at 440, 450 rupees easily, probably in 18 months time, and going forward even higher targets could be made, because the company is top class. Whatever business the company is doing is top class. They are into this mobile technology domain, they are into IoT, they are into messaging, and they are doing a lot of things. So there is no doubt about the fact that if there is no accounting, you can say, uh, if the numbers are clean and the numbers are easy to understand for investors, this stock can go anywhere from here. But if depreciation again comes in, if other you can say expenses comes in, and the numbers are confusing for people to understand, then it is very difficult for large investors and even retail investors to have a long term view in such stock. That is my only point. Again, I want to stress the fact that the company's management, the board, etc., are doing their best, especially Mr. Uday Reddy, who has bought into the shares even more at around 180, 90, 190. And that just gives confidence to investors that the uh, management has bought more stakes. So I think their stake has gone up to 41 or 42% from a mere 25, 26% just 2, 3 years back. So that is a tremendous booster. But the only issue is it's hard. The numbers are hard for me to understand. Similar is the case in pharmaceuticals, where it's hard to understand the business for me, and that's why I stay away from some of the stocks, albeit the rally has been there in pharma. Same is the case in NBFCs and banks. Uh, Anything that happened with you say a Yes Bank or other small banks like RBL, etc., it's very hard to envisage. And then you look at any company like a Hindustan Unilever or a DMart or Reliance, even for that matter, Reliance Consumer Business, or any consumer stocks like Dabur, etc., or even a smaller consumer stock like Tasty Bites, or anyone you pick up, their numbers are very easy to understand that, okay, if they are going to have, or even Kilpest for that matter, which is a small cap, that if they are going to have 100 crore profit in case of 100 crore sales in case of a Kilpest, then we know that their net profit margin is around 35-40%. So they could definitely come out with around 37 to 40 crores of net profit. That is how it is. And then the EPS can be calculated. But in case of Tanla, it is hard to, you can say, forecast numbers. Basic thing is that. So in one line, it is hard to forecast numbers, and that's why I'll stay away. But if there is consistency in the numbers that Tanla is producing, then we could see 440, 450 on the stock in the next 1.5 years or so. So this was about Tanla Solutions, and now I'm going to talk about IPOs in general. Uh, I believe that IPOs are something to be avoided altogether. That's it. If you pick up 15, 20 IPOs, or if you pick up IPOs that have been listed over the last 5 years, you would see that 10 to 15 of them have only run up and given no chance for investors to buy the stock again. It has run up like 4, 5, 7 times. Otherwise, other stocks have all gone down. After listing, they have gone up, and then you can say that probably something like see, after listing, the stock goes up. Okay, for instance, you buy an IPO and the listing day it goes up tremendously, you sell it. Now, my query in IPOs is this: number one, how many shares do you get in an IPO? You will get some lots, like you cannot buy, say, if Kilpest or a Tanla, say a Tanla comes out with an IPO at 200 rupees, You cannot buy, say, 5 lakh worth of shares in an IPO in that manner, or even even you cannot buy something like a 500 shares of Tanla Solutions. Yes, you would probably get 100, 200 shares, and then after IPO the stock goes up 10-20%. You make something like 8,000 rupees or 7,000 rupees, and then you have to pay tax on it like 15%, and you end up making something like 5,500 rupees. What I am trying to make you understand on this channel is you can make a lot of money by simply investing rather than playing this game on an IPO. So now the second point is, okay, you say that I want to invest into a company through IPO. Now you want to invest into that company. So for example, that company is, let's say the example is DMart, because I picked that deliberately. Now that stock did not fall at all. So it came at with an IPO at 580, 600, and it never looked back, came back to 600. I agree. But you could have bought at 650, okay, and you have an investment. So you might have missed out buying getting that at 350 for a doubler, but you would have got at max 100 shares of DMART. uh, yes, you could have made 60, 70,000 rupees on it. I agree. After tax, around 60,000 or so. But where is it now? So you see, so you sell it, you make that money, you pay the tax, and then you have that money with you. Wouldn't it be exciting to hold to would have held on to the stock for even 6 months, because that in those 6 months the stock went from 580 rupees listing to 1,000 rupees. So I think if you are buying the stock in an IPO for a listing gain, it is not prudent. I think it is gambling at most. Yes, you may get 10-15%, maybe even 100% return, but you will, but then the issue is how much money can you get put into an IPO, or how much lot size, or how many shares you'll get in an IPO. That is very less compared to buying from an open market, albeit at a higher price. If you are ready to hold for 2-3 years, and if the company is pretty good, and you can hold on to the stock for 3 to 5 years, you will make 3, 4, 5x returns in those stocks. And that is the best case scenario for you to buy into an IPO. What if you buy into an IPO and you're not able to sell it at the right price and it reverses? Or what if you buy into an IPO for an investment purpose? Like, for example, you would have done in Dixon at 17, 1800. It went to 3000. Uh, you sold, it went to 8,000, you would have to buy again. That's a different point. But it went to 3,000, then 4,400 in 2018 December, and then it reversed back to 1,800 2 years later. So again, if you are saying that you want to invest into a company through an IPO, you got some shares, yes, you're making money at a particular time, then it also reverses. The stock reversed and you're at no profit, no gain. You would have made the same amount of money buying from an open market later on. So I talk about investments here. I would suggest that if you are looking for listing gains, don't invest into an IPO for listing gains. That is short trading or gambling, and do not get into that thing, because that could go either way. Yes, it could be up 100%, it could be down 10% on that day. So you look at what happened with SBI cards, and what is the SBI cards price today? So SBI cards at 500 rupees, or SBI cards listing down 20-30%, then the stock went down. It doesn't mean the stock was bad, but since you looked it from a point of view of a listing gain, you ended up losing money, because you saw that you're losing out, and your loss is increasing, and you had put money for listing gains. You had to get out, because that was your time frame. If you had a time frame of 5 years, you would have bought more at 500 and 600 and made a lot of money probably in 2-3 years time. Even something like SBI cards would be 1,200 to 1,400. I mean, I'm just giving you examples that could happen, and we have seen the reversal in the stock. So that is the issue of buying for listing gains in an IPO. And that is why I do not cover IPOs. because I believe for investors to make money, the simple thing is let the listing happen. Let the listing happen at double the price. Let the stock settle down. Look at the numbers of the next quarter. Look at what is the trajectory. If you see the trajectory of the stock is going to be up in respect to results, you buy the stock. It's as simple as that. So a DMart after that came out with the results when the stock was around 700, 730. It has gone up to 2500 from those days, and that was 2017. Today's 2020. It's been just 3 years and the stock is 3x. So you could have bought at 700 and loads of it at 700 and made 3x amount of money rather than getting less shares at those prices and then probably selling it after listing gains and seeing the stock at 2400. That's what I want to mention. All right. So that is what I wanted to talk about. Now I'm ready to answer your queries. You can shoot your questions and kindly use or the help of Super Chat. It will help me grow the channel. It will help you also ask me questions in detail, and I'll answer in details of the queries that you ask. Okay. Power Grid is a good company for long term, but it will give you returns in the range of 10 to 12% at best if things really go right. IEX is again good for long term with good dividend yield. Again, the returns could be tepid in that compared to pure consumption large cap plays. Dixon effect on Kilpest. All right. So yes, this query has been asked a lot. So yes, Dixon is coming into it, and yes, they will make testing kits. But I can tell you one thing, that Kilpest is the pioneer into it, and they have got the US FDA approval. So what Kilpest has under their bow is the fact that they can export. So it could happen that they could export from October or November. And if this continues, and I'm of the belief that testing would continue throughout FY22. So it is not going to end because the vaccine is not going to come to all the people. So in that regard, Kilpest will have some sales, whether it is 50,000 a month, 50,000 tests a month. They did 4 lakh tests a month this time around. So it could reduce to say 40,000 or 50,000 tests. But Kilpest has the ability to sell at higher prices. They're not going to compromise on margins, and that is the best part. Second thing is Dixon's effect on Kilpes will be that Dixon is not a company which is tailor made and dedicated towards making testing kits, whereas Kilpest is. So Dixon has a lot of businesses, and one of their business would be this, in which they would probably do this business for around 5% of their total revenue, whatever they are making, 5 to 10%. Whereas Kilpest's major contribution for the last quarter came in through this. All right. Both GNFC and GSPL is good again on declines, not on immediate level. Tata Consumer has run up appreciably. Major declines, yes, get into the company from a 3 to 5 year time. A VMart, I would say on declines can be bought, but DMart is a better stock in the same sector. CDSL ran up. So CDSL is a very, very good company. These type of stocks which are concept stocks which could go up continuously, like the you can have a life insurance companies or a CDSL, etc. These companies should be bought when there is no talk about them, when there is absolutely blood on the bath, and you just buy and sit on it for years, for donkey's years. It's like that. It's not going to give you returns like you saw just now. So I'm saying that you may buy it, but don't expect returns immediately. Returns may come immediately also, but then do not sell. Have a good long term view, and you'll make a lot of money in this. Alembic Pharma, good share on declines can be bought. Banks, I would say HDFC, Kotak would be good, but I would avoid banks and NBFCs and this insurance. Sorry, not insurance, but all this financial sector altogether. All right. What's Tanla target price in 2022? Well, I have discussed that you can reverse the tape and find out it could double in the next 18 to 24 months. But there are other things as well. Kindly watch the whole video. Neogen is good. Astra Poly is a good stock. It's a good stock. Accumulate, but have a good long-term time horizon. Do not expect mega returns in the next 1 year in the stock. Larsen and Tubro, I think you're asking about L&T, Infotech, and all that. Those are good companies. Actual buying level is between 2000 to 2100. Good stock to buy. Accumulate, wait for upside. I think 3000 is possible in the next 12 months in HUL. Prince Pipes came out with good numbers. So finally, I've looked at the numbers and they've come out with something. Decent numbers, but the stock has run up. So probably declines, wait for major declines and again get into it. GVK Power, total avoid. All right. Amber, I would avoid. I'd still buy Dixon at these levels. Declines, I would buy. I consider much. That is a much better company. There are a lot of revenue stream that Dixon has compared to something like an Amber, which have one or two. All right. Polycab declines can be bought. No issues. I no comments on Birlasoft. I need to understand, and only then I can talk about it. Okay. ITC, I would say and avoid it. It's going to fall some 15, 20. I think at least 8 to 10% from these levels. All right. Uh, there's been one, same questions are repeating. That's why I'm waiting. RVNL, I'm going to come up with a video. Decent company, but again, the return ratios are not great. So if you can hold for 8, 10 years, and really wait without any returns, probably you can buy because the numbers are okay, and the stock is relatively valuation is cheap in RVNL. A best stock in chemical sector, Pidilite. If you don't want to have a Pidilite, then you can look at something like SRF. SRF is pretty good. Okay, fine chemicals is also fine organics. Page Industries is a buy for me. I think the numbers are bad because of whatever has gone on. We have seen in that quarter. I think 18 to 20,000. It's a decent buy. May go to 16,000 or so. You buy more. It's like that. Hold should give you 18 to 20% over compounded over 5, 6, 7 years. Naveen Fluorine is a good stock. All right. Cient is good. One can look at it. Okay. Hero Motocorp. So autos, I believe autos will have a decline. They it may happen this month, may happen in November, but will have a decent decline in which all the weak hands will go away. But after that, you could see a big rally in autos, I think, from FY22 onwards. Deepak Nitrite major declines can be bought, although it has a run up a lot. L&T would be a complete avoid. What can you- All right. ONGC again and avoid IOC, decent company, but I would prefer pure consumption place that one can get into. Yes, it is a good company, InfoEdge. I think InfoEdge can be bought on declines. I think InfoEdge is headed to 42, 4300. I don't know when, but quite soon. All right. Nuclear Software, good company. Yes, Asian Paints is expensive. So only way to deal with such companies like Asian Paints or DMart, etc., that you have a 4 5 year time frame, 3 to 5 year time frame, and then you get into the stock. The valuations will look better, and any declines 5, 7, 8%, so 100 to 200 rupee decline, 150 rupee decline in Asian Paints is good enough to enter. IRCTC at these levels, good. I see 2000 coming maybe in 2 years, maybe in 3 years. maybe in 1 year. But I think there is a good chance that it would be up 60% from these levels in the next 2 to 3 years. Actually, glass coat both are expensive at the moment. They were good. I made video on actually glass coat many months ago back. At that prices, the stock was good. At the current prices, I would avoid both the companies. Avoid VST Industries. Airtel is good. Airtel, my view is that 510 has been the bottom that has been made finally, and you could see much higher levels going forward. Thanks a lot, Fun Stocks, for your contribution. Good morning. Can we buy Indigo at this levels for short term? Difficult to say. Fun stocks probably. Let me have a look, and then I'll tell you some stop loss if I may can tell you. But I would say short term trading in this market is not quite something that you should be doing, because I feel the big fall could happen. It has not happened, it could happen going forward. So the stock is at around 1257. Probably have a stop loss at 1160. That's 7-8% lower. And you could see levels of 1500, 1550 in the stock. So that is what I can say. Thanks a lot, TT Chaco. Uh, Thank you. Thanks a lot for all your support, TT. All right. India Mart again expensive. I feel there could be a 10-15% decline. So these mid cap stocks that have run up appreciably because of the theme that people are working from home, etc. Be very careful. So India Mart could correct 8 to 10% at least from these levels. Again, PVR has run up. Maybe it can run up another or go up another 5 to 10%, but then a sharp decline would come in when the numbers would come in. I don't know June quarter numbers have come in or not, but whenever the September quarter numbers would come in, then you would see the effect of it on these stocks. FL is again very good at 17, 1800. Not on in these prices. It has again run up. So most of the mid and small cap stocks have run up. They may go up another 20%, but I would not prefer to put in money at these prices in all, you can say, in all the mid cap or small cap. Yes, some are fine to be invested in. Okay. Galaxy surfactants is good. It's a good stock to get into. Frontier Springs declined 260, 270. Good levels to get into Frontier Springs. Jamna Auto have a good 4 5 year time frame. It could give you 100% return, but not in the next couple of years or so. I think in the auto segment, pure auto companies would do very well in the next 2 years, 2.5 years, but and then later on you would see numbers kicking in for other, you can say, ancillary companies. Sai Procter and Gamble is a very good company. Declines, just buy, but buy it for 8 10 years. It will give you very good returns. Okay. Uh, Petronet LNG. Thanks for your contribution. First of all, Achut. Petronet LNG is decent, but if you want to get into gas, I think MGL uh, at these prices at lower levels, still 770, 750, good levels to get into. You might have a situation where the stock will not give you any returns for the next 6 months, but if you have 2 to 3 years time frame, if you buy it around between 800 and 900 Mahanagar gas, easily you can have a 70 to 80% upside in the stock in the next 3 years in the in this, rather than buying a Petronet LNG. And thank you for your contribution. Right. Vinity Organics or Alkyl Amines, if I have to pick one, declines alkyne amines, current levels Vinity Organics. I would say that. Yes, you get a 10 to 15% decline. Alkyl amines comes to major averages between 20 and 50 DMA, or even just below 20 DMA. A very good company, Alkyl amines, to invest into. Aztec is a good company. Titan Biotech, better to buy Kilpest probably later on below 300 rather than buying a Titan Biotech at these prices. Reliance, interesting. So, one query about Reliance. 2100, very good levels. If you have a 2 to 3 year time frame, it could go much, much higher from these levels. Reliance. All right. Fame Organics is good. Fame Organics is a good company, but again, the run up has been very sharp in this Fine Organics, Fame Organics, and all chemical companies. Declines on major supports can be bought into. FL I've already talked about. You can reverse the tape. All right. Balkrishna Industries has some issues with the numbers and sales, although the sales are picking up, and we have heard about the North American sales numbers. Probably again, you buy at current levels. If there is a decline, you buy more. Don't put in money at these levels altogether. All right. Thank you guys for all your support and thanks for being here on this live session. I may not be available for the Thursday's live session this Thursday, but would definitely try to be again online on Sunday morning. So next week. So probably see you after a week on next Sunday. Thank you. Thanks for your time.